A very good morning to Miss Siti Hasna Abdul Hasna, audio lecturer. My name is Meesha Munirih and Effendi, and I'm coming from the Faculty of Bachelor of Accounting and Finance. Today I will be presenting about the Padini outlets where the company that I have chosen, Padini Holdings Berhad. So let's look at the background and what are the main principal activities of Padini Holdings Berhad. Okay, so let it all begin in the year of 1971 by supplying a small ladies garment and wholesaling business to departmental stores in the Malaysia. The founder of these Padini Holdings Berhad was a young man named Yong Peng Cheng. They don't only sell small ladies garment but also sells like both men's and ladies shoes and accessories and more other children's garments, many to wear and a lot more accessories which would attract the customers. So the Padini had to create an own identity for themselves. So as the fashion industry requires them to do so, so they built a brand in their own name, which is Padini. And once they established it, they moved to the retail industry. So Padini became one of the most well-developed fashion companies in Malaysia with two multi-brand labels, with many Padini concept stores under with 8 brands, which you can see as I mentioned here. There are like all over 140 stores in many markets around the world, such as Cambodia, Malaysia, Brunei, Qatar, Thailand, and many more. So the Padini's main motto is that they have to fulfill customers' expectations despite of sizes, and they consistently attempt to surpass clients' assumption. That is their guiding principle till to date. Next, we'll be looking into ratio, which are divided into 4 ratio: liquidity, activity, efficiency, profitability, and solvency. So the first ratio is the current ratio. So the current ratio shows that how the firm has the capacity to cover the financial needs of the firm, which deadlines are within the one period of time. So if you can see here, the currency ratio, which is actually of 2020 year, is higher than the year of 2019. So it shows that it performed better. But current ratios that are more than one eventually means that Padini Holdings have sufficient amount of for both the years to pay up the liquidity, the short-term obligations. So it can be said that Padini will be able to cover up the liability for the upcoming future time for with the liquidity they have for now. Next, we'll be looking into the quick ratio. Quick ratio is means that they will be able to compute the capacity of the firm utilized its immediate currency or near resources to pay off the current debts immediately. So the competition doesn't show much similar shows much differences. It is like 0.001 similarity. So the company actually were able to pay off the current liability better in the year 2019 compared to the year 2020. But however, since both ratio in the both years are higher than one, it can be said that they had no problem paying off the current debts to the creditors. Next, we'll be talking about the inventory turnover. Inventory turnover means that it's a tool to compute the amount of inventory used in a business period and how much has been restocked back for the business. So a mediocre firm will have a ratio between 5 to 10 that shows that the management of the inventory is good. In the year 2020, the ratio was 0.012, which is a negative, and in the year 2010, the ratio was 0.075. Year 2019 was better actually than the year 2020, but however, in both the years, they have low inventory turnover. Next, we'll be saying the net asset turnover. Net asset turnover, it means that the ratio used to compute the capability whether the firm can actually create revenue with the resources they have in their firm for that period of time. So the ratio of the net asset turnover will be better if it's higher. So the company which has a ratio of one considered very good, where it shows the company have produced sufficient amount of revenue for themselves. It can be stated that the net asset turnover for the year 2020 was higher than the year of 2019. So it's in the year of 2020, Padini were able to produce more sales compared with the previous year. Next, we'll be talking about the gross profit margin. So the gross profit margin defines that it's a tool to utilize to keep the financial health of the firm quite well stabilized. So actually it calculates the margin by deducting the cost of goods sales where only the money of deductions are left over. So according to the above computations, we can see that the gross profit margin for the year 2020 is higher than the previous year. So the profit made by the company in the year 2020 is higher. So if the profit margin is higher, the efficiency of the company is higher as well, where they showed good efficiency in the firm. Moreover, the difference between both these values are not that significant, which shows that both companies did quite in a mediocre way for the both years. Next, we'll be speaking about the net profit margin. So net profit margin, actually it's a tool to use to compute the profit generated from the sales made in the company. The net profit margin for the year 2020 was 7.92 and the year 2019 was 12.29. So in this ratio, the year 2019 was higher than the year 2020. So there, so a good margin will vary according to industry, but the higher the better. So if the ratio is more than 10, it's considered low. Therefore, the ratio, what this 2020 considered bad and 2019 considered good because it has a higher ratio. However, it was more efficient in the year 2019 compared to 2020, as we can see here. Next, we'll be talking about the returns on assets. So, the return on asset is the overview of the capability of the firm to produce profit from the available resources in the firm. So, it can be stated that on the year 2019 was higher than the year 2014. It has dropped drastically in the year 2020. So like return on the assets above the 5% are considered good. It shows that around 29.4 for 2019 and 7.7 for 2020, and this shows the return on asset was excellent in both years as it has just be more than 5%. So in the 2019, of course, it performed a better result as it was more than 20%. Next, we'll be speaking on the return on equity. So, the return on equity means that the management of the firm to produce the profit of the shareholders' equity that available in the firm. So, in the 2020, the ROE of 0.104, while the previous year it was 0.296, a rising ROE is considered better for a company. Therefore, the ROE for the year 2019 was better for the year 2020. Next, we'll be speaking about the last but not the least, a solvency ratio, debt to equity. So debt to equity ratio is a usage of the liability and equity that a firm uses to monitor its resources in order to meet the obligation of the liability to creditors. So a lower debt ratio signifies that the company are more to debt financing compared to the equity financing. So the company has a higher level of debt financing in 2020 at 0.825 compared to the year of 2019 at 0.290. Since the value of both years are less than 10, the firm has a very less potential of being risky due to the low intake of debts in their business. Next will be the return on capital employed. So the return on capital employed mainly focuses on the computation of the capital used in the firm. So ROC effective if its value more than 15% for all the firm and lesser than considered risky management that can bring the firm into loss. So the 2020 was lower for the year and 2019 was actually a bit higher than 2020. So the year 2019 had more ROC compared to its later year. In both the years, the company performed well and its ROC are higher. That shows the excellent management. Next, we'll be talking about the impacts of COVID-19 crisis. So during the mid-March, May, all the Padini's outlets were closed due to the movement control order. So this impact of the outbreak had effect on citizens where few people visited the stores and even the recovery movement order was applied. Next, there were lesser sales actually. So lesser sales leads to the reduction of revenue as outlet sales reduced about 93.2% of retail 9th-month financial year. Lesser sales leads to the stock clearance with cheaper prices of the actual values because Padini expected higher sales on Chinese New Year and high Raya sales, but eventually the lockdown had made it worse. There were no people who were willing to buy those stocks and the stocks had to be cleared out very soon. And last but not least, and we also have to see that the underperforming outlet has been closed. So we can say here that the underperforming outlets, like around 11 outlets, had been closed actually due to the COVID outbreak. Padini's financial year says that they have estimated there will be a cut down of 22.4%, 12%, and 3% respectively for the 2021 year, 2022, and 2020 year ended. Next, we'll be speaking about the impacts as well, where the net profit has reduced, revenue has decreased, the net loss has gained drastically. So Padini recorded a huge downfall from a net profit of 54.43 million in fourth quarter final year 19, while revenue also decreased to 62.27% from the 516.47 million. So all this net profit has been reduced drastically, and Padini as having been a problem that once they try to come back, various impositions of lockdowns have effect on the pandemic has made the cumulative earning to drop unexpectedly throughout the year. Once they come back, they put the second lockdown. Once they come back, they put the lockdown. So it's been very hard for them to come back and achieve in a higher revenues and net profit. Next, we'll be speaking that despite of no matter what the circumstances were there for Padini, but Padini managed to sustain the share price where at 3.21 cents, giving the company a market capitalization of about 2.11 billion. Padini had 657.91 million issued share according to the latest annual report. Next, we'll be moving on to the strategies that can be used to perform better in the future by Padini. They can actually host virtual events that are hosted which will interest and educate the audience. They can actually target customers' needs and reaching them from their home will be a better method of approaching. Actually, they could give a lot of giveaways to their customers to help in a bond with the brand. The webinar they conduct should be very entertaining and captivating so that they will immediately be attracted to the brand. Other than that, they could be investing in the market. So like investing in the market in the sense of like they could be like in investing more in their monies in promoting their products under the showcasing and paid publicizing sections. Actually, why we have to say this is that because it could actually help them to clear out the clients who preferred mailing, rundown, and get more. The other strategy is that they could strategize the digital marketing efforts. Digital market channels are low cost and more it's free, but retailers have to choose the most strategic efforts in choosing the right times and resources. Makes they have to make use wisely of the social media platform to post it at the right time and the right moment so that it could catch the market. Next, to improve the virtual selling skills, they have to sell in a way to approach in a professional way. The virtual sale should be prioritized and given importance similarly in person meeting. The seller should be able to understand the consumer's need. The deliverers should be value the great products according to customers' likeness. The relevant useful information should be provided. All these things can help Padini to improve their sales. Last but not least, they should be able to adapt the customer's character of resilience and vigilance. Padini themselves should have these characteristics because these characteristics will help them no matter what the outbreak is or situation is, they will be able to overcome it and they will have a very many ways strategies to in a creative way to overcome all the problems and they will be able to increase their revenues and sales for their company. So this is my presentations for today, and thank you for actually listening to it. So yeah, and thank you.